Hey everyone, welcome to another Groundhog Day. That's why I'm wearing the same shirt. I think Adam maybe wear the same shirt you wore last time.
No, not quite, but pretty close.
Okay, I couldn't remember. I just thought I had to go back to the film from last week, the recording, and find out what shirt I was wearing. So I just would stay with that Groundhog Day theme. So we've got Jack and Adam again. Not a ton of new stuff on this PPP stuff, but there are some rumblings coming down the pike of another round, et cetera. So just as a reminder, as everybody's ramping on here, I'm still amazed that you guys are showing up for this. It's amazing. So thank you. Hopefully we're bringing value. And if you would use the Q&A for questions. Didn't get a ton of questions over the night, which is kind of amazing, but and then use the chat to continue to encourage or harass us. And so I see that Joe has said good morning. Thank you. Appreciate that. Adam, you got anything? I know you're wearing your Clean Juice OKL No
Yeah.
t-shirt, which we love. You have anything? And then we can pass it on to Jack for a little preamble before we go.
Yeah, a couple things. So if I just think about what's come up in the last week or so beyond the additional options that may be out there in the future based on pending legislation, which I'm going to give Jack, 5 minutes to figure out before he has to go on and say what's changed. On my gallery view, so it's always funny when I see Jack smile. That's it. So the biggest bulk of questions that I got in the last 2 weeks, really came down to FTE count and banking relationships. So I'm going to start with the banking relationships. I mean, we literally just got off a call where this was going to be relevant. It was for an investor, but it's the same thing as a banking relationship. It really comes down to, what am I going to do with the loan forgiveness income? And in the what do I do with the loan forgiveness income? And by that, I mean, whether it's taxable or not, from a financial statement reporting purpose, you started off getting a big chunk of cash, and then you recorded a liability called PPP loan. And whether you did it real time or not, as you were spending money for qualified expenses that you were pretty darn sure are going to be forgiven, you're effectively relieving the loan. So if you just think through your journal entries, going back to T-charts, your credit is cash for the expense, your debit is the expense, but then you record a journal entry that debits the loan amount, which reduces the loan amount, and then credits another income item that effectively shows, hey, I'm basically getting these proceeds. Well, where does that matter? I mean, we've all got covenant calculations, funded debt to EBITDA, debt coverage ratio, whatever it is. And the whole purpose of this funding was to make sure we weathered the storm. So I've had some clients that haven't really done anything with the loan off their balance sheet. And, some of them have the same EBITDA, some of them are down. Banks are getting a little bit sketchy, as would, potentially outside investors. So, my guidance really has been, if you don't have any financial statement reporting requirement, meaning you aren't giving these to anybody for any purpose, really other than, annually to my bank for a line of credit renewal, probably you can tune out for the next minute. But if you've got, a monthly reporting requirement or a quarterly reporting requirement, or your line of credit is due, man, you should really book this stuff. Because if you think about the other areas of gaps, again, I'm hopefully, if one of my, make it to do, Gary, we need to post this to the team to say if there actually has been any gap guidance on PPP loan forgiveness. I still don't think there has, but there might have been, and I'm just stupid or lazy in terms of not looking it up yet. But actually, if you Google that, Jack, gap guidance on loan. Now he's really smiling. It's like, are you kidding me with that? If you think about the other areas of gap where this has relevance, it's really around, if you're pretty darn certain of something, you book it. GAAP is based on a principle of conservative accounting principles, and if it's darn likely something's going to be forgiven, it's typically okay to book it, because that is the most relevant information for a user of the financial statement, while it's still relevant to the principles of conservatism. Now, if you wanted to do a footnote disclosure that says, hey, this hasn't been forgiven yet, but we really believe that it will be, that actually is pretty similar to what happens with litigation expense. If you have a case that's not going to go your way, or alternatively, you're set to receive proceeds and your lawyer is pretty confident it's going to go your way. In this case, we're pretty darn absolutely confident in what's probably going to go your way based on the guidance that's come out from the Treasury. So I would be looking to, if you've got a reason that you're having to report financial statements to somebody, I would look at making the financial statements reflect the fact that there has been some use of the PPP funds in the sense of making boosting your overall operating income to offset any downturn that you had from the pandemic. Somewhat related to that, remembering that it takes two to tango in terms of loan forgiveness. Your bank has to be ready to receive loan forgiveness. We still haven't heard of any bank that's like, hey, come on, bring them on, bring on the application. So if we're erroneous in that, and we've got some banker friends that are out there that are saying, no, bring it on, we want to get through this, then please correct us. But so far, we haven't had anybody or any client or any bank that said, hey, we're ready to go on our loan forgiveness application and process these things. I think because they're still waiting for guidance from the Treasury and the SBA in terms of how they're going to get reimbursed once they say, forgiveness granted. So everybody's still waiting on that. But people are starting to fill out their applications, because if you spent the money in 8 weeks, you want to use the 8-week test period, regardless of whether you apply today or tomorrow. So same concept still applies, that until they change the taxability of the expenses to go from being not deductible to deductible, you still need to consider, is this something that you wait to do until 2021, since you have 10 months to apply? But all that said, what have I been rambling about? Well, the questions that I've received primarily are around the exceptions to the FTE count. So I think it really is worthwhile to say that, first off, there has not been a ton of guidance in terms of, how do you document this stuff and validate it? But the 3 exceptions are, one, I made an offer, the person turned it down, and I've tried to find a similarly skilled person. What the heck does similarly skilled mean? So that's all you have to do. What constitutes trying? Was constitute trying putting an ad on my website? Or did I have to go to Indeed? And Monster? Like, there's no that. Or did I just place an ad in Craigslist, or like my local, up here it's the Lake Norman, it's either the Lake Norman Herald, Lake Norman Citizen. Was that enough? There's no definition of, Journal of Accountancy buried on the back page. Was that enough? So there's not a whole lot of definition in terms of what constitutes trying in terms of similarly skilled. Well, what if someone has a great resume, but they interviewed like an ass? yeah, like absolute horrible culture fit, which we would always advise somebody to go for culture first. Culture trumps skills. Well, how do I prove that that's the reason I turned him down? Versus, I just wanted to turn him down to turn him down. So, that's one where, look, it's an exception, but there hopefully will be some more guidance. But that, if you Google exceptions, you're going to see a whole lot of, well, what really constitutes, similarly skilled, and how do you document that? The middle exception is, yeah, thanks, Mitch. Yeah, try not to swear. Remember, the second exception is really related to, hey, the person's sick and just can't come back. Okay, well, that's a little bit, easier to document, or they're caring for somebody and they just can't come back. And there was already a procedure in place in that with the FMLA tax credits. The third exception is I can't hire the position because it would effectively, make me go bankrupt. I mean, that's the extreme example, but, due to guidance from the CDC, I just don't need the position anymore. Which really could come down to, I can't create a safe work environment on the one hand. The other hand is I'm just shut down. So like a gym, a restaurant that's operating at 50% capacity, a bar that hasn't been able to reopen. I mean, these are all examples of, things where it's pretty clear that the reduction is related to coronavirus and CDC guidelines. But here's an unclear example with client to be unnamed, but if you're listening, you know exactly who you are. They supply NASCAR teams. Okay. Well, NASCAR has pushed off the new race car, I believe. And, they're running races right now, but every team's dollars are down from a sponsorship standpoint. So do you really think that teams are doing anything other than the absolute freaking minimum to keep the car from crashing? They're not doing qualifying. So there's less of a need for parts associated with qualifying races. So it just, the teams just frankly are not going to spend as much money on parts and fielding the team as they otherwise would have. Well, why is that? It's because you can't go to a dang race. Well, why? How does that relate to sponsorships down? Well, because people can't go to the race to then entertain clients, which is why, bozos like me does it affect, Jack's really rich law firm? I'm teasing Jack. It's supposed to smile there. Shoemaker Loop does not sponsor a car, by the way. But, Fifth Third does. So, does it affect Fifth Third on the sponsorship side? Yeah, I mean, they made a commitment. It's still showing up on the hood of a car or whatever. But in terms of that team being able to go out to a race and then entertain clients, yeah, it does impact that. And that is causing people to spend less with the teams, which then causes them to spend less with suppliers. Is that a case or not? It's not definitive. I would argue that it is, but it's not black and white. So those are the things that people are struggling with right now in terms of the average FTE count. So the counsel that I've given people is that, just like Jack has said over and over again, document. Like, don't be afraid in that last example to go ahead and say, look, I am claiming an exception, but your story should be like that. Well, show me where exactly the CDC said you as a part supplier shut down. Well, they didn't, but let me tell you how I got there. So with that in mind, I will shut it up and turn it over to Jack.
You sure we have time?
Yeah, thanks. Appreciate that.
All right. So a couple initial comments. First of all, I have wanted to sponsor a NASCAR, but we can't fit Shoemaker Loop and Kendrick down the side of the car. SLK really doesn't get it. And Shoemaker, everybody thinks we make shoes, so that didn't work out.
So here's what you got to do. You want it on the hood anyway. So just, that's what you got to do.
That's sweet. I love that. And a couple of weeks ago, we talked about the coin shortage, and you guys thought I was kidding, but that is actually apparently a thing. And so
I didn't think you were kidding.
Yeah, and I was sort of kidding, actually. I thought it was, and I had heard that I received an email from the Chick-fil-A in Blakeney that if you come in and bring your coins, that they will give you a treat, which is a very interesting way of monetizing on a problem, but also giving you something to come in. Although I think most of us don't need a treat to come into Chick-fil-A and eat that food anyway, because who knows what they actually put in it. I think it's like some sort of liquid crack cocaine in their food. So anyway, on Amazon, you can buy this. So if you have kids, you can actually, put it in the top, you crank it, it knows what slot to go into, and it's the size of one of these things, right? And then instant money that you've been saving in your drawers. So, all right. Secondly, some articles. I just want to give you guys some statistics. And these are some, I try to stay away from the political articles and really kind of focus on the facts. But one commentary that I saw, and I have some things up on my screen, is in discussion of how the program has not gone as smoothly as we had wanted it to. Comment was, and looking at the SBA and Treasury being the professionals who know how to do things, and banks as well, and not to disparage banks or any bankers that are on the line right now, but the fact that we are not getting the same level of transparency regarding the program itself is much more problematic, given that the SBA knows how to do this and lenders know how to do this. So basically what they're saying is, if they can't figure it out, then who is going to be able to figure it out? Hopefully, and as we said before, this is a learning curve, and we're higher on the learning curve, and that all of us, meaning the government, us as borrowers, the lenders, kind of when the next wave comes, which may start next week, because I think lawmakers are back in town full session next week. I think they took a little bit of an extended break. And so hopefully that happens. Some other statistics or some other information that I found was in relation to restaurants, and that the need to have the next set of stimulus is very much needed, in particular in the restaurant industry. I know everyone is hurting, but there was a statement made or comment that as many as 85% of independent restaurants say they will close without direct help. And so passing this next bill will be certainly helpful and needed. A few more statistics. Of the 5 million loans, and I'm talking about actual loans, not dollars, 4 million, and this is, let me take a step back, in relation to the automatic forgiveness of loans that are less than $150,000. So that's the context of this comment. So almost the 5 million loans, more than 4 million were for less than 150,000. However, and that's my comment, however, those loans made up less than 150 billion of the awarded 500 billion. So what they're saying is that many of the loans, 4/5 of them, so 80% of the loans are under this $150,000 range. However, the actual dollar amounts are in that the rest of that 20%. And so there's more details that have been published, and they acknowledge that there's potentially some errors in the actual reporting. A couple more statistics, that this new bill that's coming out will cover 85% of the owners, and we talked about that. This one says 85%, but I said 80 just a moment ago. And that the people that are over 150 still have to go through all of the rigmarole of the true forgiveness process. That's their way of saying, hey, look, we understand that those that receive less than 150 are probably, first of all, not worth going after if they made a scrivener's error, a clerical error in the numerics, whether it's on the application side, the receipt of fund side, or the forgiveness side. And so that we will be looking into those who received larger dollar amounts, and the fact that it's a less number of loans that are out there for us to do that. So at the end of the day, what they're saying is we can handle it, meaning the government can handle the review. And let's see, so a few more things. There is, and I wish I could republish this to all of you, but the International Franchise Association, yesterday I attended a virtual seminar, and it's about refusals to return to work and childcare, and kind of all those things that are on our minds as business owners, and the what ifs, and how do you do certain things. And I feel confident that we will at some point publish something like this, which is kind of best practices. There's a lot of this stuff out there, but this was a really good, concise summary of like the Family Leave Act. What do you do in certain circumstances? That kind of a lot of the what ifs. And if someone, and I passed this along to our SBA experts, our employment law experts in our firm, to hopefully put something together. And if they don't, then I will, and I will be able to share that with all of you. And then lastly, there was something that actually, Gary, I don't know if you want to talk about it, since you're the one that found this article and shared it with Adam and with me. about the clarity for self-employment borrowers, that all hope is not lost, and just clarification about using owner compensation replacement as the factor of 2019 self-employment income, but with the cap of, in this instance, in this example, it was the $20,000 cap for that. And a piece of advice which I thought was interesting, and Adam alluded to this as far as the documentation process, what they suggested here was that, at least for self-employed borrowers, that you keep those funds separate. And we've been saying that all along. Kind of, I think even Adam and I kind of have been going back and forth as to, well, do you really need to? It's kind of a pain in the butt, but yeah, maybe you should if you can just click a button and sign up for a certain account, back and forth. But the interesting comment was that, that since the SBA must approve all loan forgiveness applications above the threshold, you're well advised to make things very easy for the SBA to understand. That will make it easier to approve your righteous application for loan forgiveness. And then it says fingers crossed. So, anything that you can do to make it easier for them, the transparency, and if you happen to get on their radar for whatever reason, that you can very easily say, point A, loan application. Point B, receipt of funds. Point C, forgiveness application. Here are my calculations. Here's all the working papers, et cetera, that I have, spreadsheets. Here are the emails that I sent out the offer of employment. It was rejected. Here are the reasons why, if that was stated in those emails. So just kind of a reiteration of some of the things that we've talked about in the past with respect to documentation.
Yeah, so I want to dovetail to that, which was we've got a client that last year was single member LLC, so self-employed, didn't think he was would qualify for PPP, but we're like, no, you should. And so as many know, and I think last week I said, hey, one bank has opened up the gates again, because it was, the last I saw was 129 billion was still left. I think we said 130 billion last week. Pinnacle Bank said, hey, we're opening up the gate until August the 8th, so they can apply again. And then also heard yesterday that First Horizon is also doing the same thing. So I know now of two banks, that there are probably more, but those two for sure have opened up the gates. And First Horizon is cutting off the application deadline of August the 4th, even though the federal is the 8th, or the cutoff. So just thought you guys ought to know about that. The other thing that I have heard is, and this comes from some of the smaller banks, but including Pinnacle, which is you cannot even begin to apply for forgiveness before the 8th of August. We were on call with a client this morning that's with BB&T, and it sounds like they may be ramping things up a little bit earlier than that. But again, just work with your bank on that. Couple things. Oh, good. Joe says his guy at Aquesta says he had 2 new PPP requests yesterday. That's awesome. Another couple things before we go into the questions. David said 80% of the loans got 20% of the money, and 20% of the loans got 80% of the money. That's Pareto. It's funny how that works. Also, did you see that they published addresses in the Charlotte Business Journal? Everyone who got over 150,000 was listed along with their ownership address and amount received, generally, but not precisely. Oh, that's some deep reporting there. So let's move to Q&A. Go ahead and hit us up if you have questions, anybody. Somebody here has a statement, and this goes back to the coin conversation. I've asked multiple retail places, and they looked at me like I was crazy. So while we're on that little rabbit trail, I heard that some people were willing to give you like $1.12 back, like for change. So who knows why? there are all kinds of conspiracy theories that I've heard too about that, but who knows why.
It seems counterintuitive that, okay, if you have the ability to run a credit card, even if it's for a couple of dollars versus exchanging money, it seems like you would do that. I mean, I kind of cringe when I have to get cash out of my wallet to give to somebody and have to get changed. I was paying a parking fee as I was going in, and I was getting change, and I'm like, okay, what do I do with this? So I don't know. I have not seen an explanation as to why we have a coin shortage in the United States.
Well, I'm going to keep holding on to my Beta Theta Pi coin thing because it's going to be worth thousands of dollars at some point. So any questions out there? We've got 51 people on the line. Surely there's something on somebody's mind out there.
This is going to be easy today.
Yeah, that's going to be a short one today.
Well, I
Yeah,
mean,
really not a whole lot new, and you can't apply for forgiveness yet, so I hear you.
yeah, that's what I was going to say. There's not really much to talk about. I mean, first of all, I can't believe it's been a week since we've had this conversation, you know, with kind of the prior conversation, and that really nothing has really happened. I mean, you know, the week before, holiday week, yeah, but you know, it's kind of like, what? So, you know, we could have done one of two things, I think, is like kind of canceled today and done kind of like the Chick-fil-A thing. I think that is an interesting concept too. I know it's faith-based, the Sunday thing, but I mean, how many times have any of you said, oh gosh, you know, let's get some Chick-fil-A, and you're like, oh, it's Sunday. And then all of a sudden your desire, your wanting of that Chick-fil-A sandwich has exponentially increased. Or maybe that's me, I don't know.
There's actually a really good book about that. And Adam and I and Rachel have been reading it, and it's called Oversubscribed. It's an excellent book, actually. I'm going through it for the second time, but it's the same thing. It's the law of supply and demand. And, you know, we've thought about, well, should we ramp these things down? Well, yeah, we've taken it down from 2 a week to 1 a week. And we don't want to keep doing this if there's no demand. But as you all know, there will be something coming back soon that will raise up all kinds of flags and questions. And we're going to have the same questions everybody else is, and we'll dive into it because we're going to make it through this thing together. Got another thing here, says, this is from Joe. So many businesses to go through on the PPP CBGA list that I never found anyone I actually knew on the list, including our company. Goes to show you how much business there really is in Charlotte to grow our businesses. Yeah, that's true. Couple questions that have just come through. Robert, I knew I could count on you. Please confirm that if a business elects the 24-week period, that they can elect to apply earlier than 24 weeks. Then what are the consequences of that? Good question.
We can't confirm that because it's not flushed out in terms of what would actually happen. The problem that you get into with using the 24 weeks but applying earlier than 24 weeks is associated with the $46,000 calculation, which is effectively saying, all right, you had an 8-week period, now you got 24, take your 15.5, multiply times 3. That's not the actual calculation. But in round numbers, it is. Well, that's great, but if you only use 16 weeks, there's no guidance in terms of, well, actually just double the number. It's your number isn't 46 anymore, it's now 30. So the way it reads right now, it's literally 8 or 24, not hey, I spent the money in 12. So there's no, my only thinking currently is that if you use the 24-week period to spend the money, you'd still have to use the 8-week criteria in terms of the salary caps, because there's no, even though that doesn't logically make sense, there's no guidance on how you would update the formula I mean, you could imply, well, if I just follow the same logic, if it's, 100 grand divided by 52 multiplied times 8, then I could do 100 grand, divided by 52 multiplied times 12 if it was 12 weeks times, 16 weeks if it was 16 weeks. Like that's implied, but it's not anywhere. It's literally 15, 46. That's it. There's nothing in between. So I'm just, I'm real leery of that. Well, when I said I'm real leery, I mean, it kind of doesn't matter anyway, because nobody's taking your application for, another 2 or 3 weeks. But I'm just, I'm dubious on what will actually happen in that scenario. I think it would be logical that they would issue some interim guidance whereby you update the max salary calculation to reflect the number of weeks that you're using, but that's not currently out there as of today. Because otherwise, the position they get into is either, it's sort of like a freaking tax deadline. Everybody wants the 8 weeks and then a total lapse of time, and then everybody that wants the 24 weeks, versus kind of smoothing this thing out as people, start reaching the forgiveness, reaching their use of the funds.
Yeah, and there's kind of a practical problem too, in that, I guess in one scenario, if it's been 13, 15 weeks or so, not the full 24-week period, and you're in full compliance, so your FTE count is correct, you've used the money for proper purposes within the parameters of the 60-40, let's say, really, I think maybe the only reason, or probably the reason that you want to go ahead and apply or ask for forgiveness would be if you think there might be an FTE count issue within that last set of weeks or so. So I think just for administrative convenience or ease, I think that they're going to say, look, we originally gave you option 1 and only one option. Now we're giving you 2 options, which is better than 1 option. So don't ask us to give you 100 options, which is essentially what that might amount to. It's actually more, I think, statistically, numerically more than that, but it should be. So I think that I think there will have to be guidance, because it's a question that's on a lot of people's minds, but I don't think that they're going to now create this kind of spider web of choices that, here's, if it's 8, 9, 10, all the way through 24, to give you different routes depending on the actual number of weeks that, you are within using the money and everything else. So.
Yeah, I think in this specific case, the only leg you could stand on really would be you spent the money in 8 weeks, and you're using the 8-week calculation, but it took you 12 weeks to get the FTE count back right, or something like that, effectively. So you're going with the got the full head count back route, but you're still using 15, whatever is the max number. Is that technically correct? No, but could I see putting that down in an application? Probably, because you're just saying, yeah, like you met the intent, you got the FT count right. It just happened to be outside of the original 8-week window. It's not technically correct, but you met the intent. Versus, literally fudging the underlying documentation that says, well, I didn't use 15.5. Instead, I used, $24,000, because that's what my new prorated calculation says. And yet I still had to get an exception in that case on the FT count. So I just, I'd agree with Jack. I mean, it's either 8 or it's 24, and you're only, probably the only way you can do it would be if you use the 8 weeks, but it took you longer than that to get the FT count right. And even then, if that's something you got to provide to the bank, they've got to get on board and buy that, which they might not.
And a quick caveat to that is you may not have a choice between the 8 and 24. It depends on when, the receipt of funds, or sorry,
That's right.
So this next question is from David, and we've probably had this before, but I know that it's still applicable to a lot of people. And it says, so on table 1, when you annualize pay for someone who got paid for 4 weeks, then they left, do you do 4 divided by 52? Or if you're using the 8-week period, do you use 8 divided by 52? Turns out it's a big problem if you lost people during the covered period.
Well, I mean, you're only talking about the payroll. In this specific instance, you're basically looking at, did they pop the $100,000 or not, on a average basis. I think for this purpose, all they really care about, since they say pretty explicitly 15,500 or 46,000, those are your only 2 numbers. It doesn't matter if it was 4 weeks, 6 weeks, 8 weeks, whatever. It's during your time period chosen. Did you not pay them more than that? That seems to be it. So I don't think that it's really relevant for the purposes of determining whether or not they were over $100,000, because you paid them less than the 15 whatever. Even if annualized out at 4 weeks, it would have been over $1,000. I don't think it matters for this purpose. The second would be on the average FTE side of the equation. They're there 4 weeks, out of the 8 weeks. So I guess that would be, half FTE if it was 8 weeks.
What about if it's, if they're calculating the fact that you've got to maintain 75% of the pay in order to receive
in this case, it doesn't matter because the person left. I mean, the pay count only matters to the extent that the person actually had their rate of pay reduced, which means I went from $100,000 to 75, below 75, or I was at 50 and I went to 25, or I was $50 an hour and I went to $25 an hour. The time worked doesn't count for that purpose. That counts for the FTE count.
This next question is probably for you, Jack, and here's the question.
Yeah, thank God.
Bring it.
So get ready.
All right. Wait, let me.
Where do you see pressure on law firms, private equity firms, high-profile businesses, et cetera, who receive PPP going now that company names have been published? Will they have additional consequences beside and beyond the initial headline risk? Any legal or regulatory consequences, congressional testimonies, et cetera, or has this faded?
So I'll go in reverse order. I don't think it has faded. I think it's just been kind of put to the back burner for a little while because there's going to have to be accountability for implementing these rules that have been created to implement or enforce a needs-based program, essentially. And so, we've already seen kind of the early seekers of forgiveness and grace that have said, yeah, okay, we better give this money back. I suspect there are, and I've had conversations with clients that same question is, yeah, we're not sure how we're going to end up on this. And we're above the 150 line, in some cases above the $2 million line. The ones above the $2 million line, I think, are more at risk at audits and things like that. So, what I've suggested is that to the extent that you can not use those funds and hold them and continue to operate, then because I guess the theory is that if you have concerns about the fact that maybe you're not entitled to this money to begin with, or there's a forgiveness issue, then doesn't it follow theoretically that you can probably survive without the money, at least for a little while, because it's a high dollar amount. And so, or that you have the ability to essentially self-fund the operating expenses with anticipation of filling that hole that you've created that you've used your own money to pay payroll and things like that, that this money that you sought and have in your separate bank account will be used and transferred into your operating account. So I think there's more to come, and I would just say be cautious about actual use of that money if you're not sure about it. I think that the publication in the Business Journal and other places is meant to be exactly what you think it is, which is putting peer pressure, public scrutiny to try to self-enforce those people that are having an issue of conscience with respect to holding those funds. And I don't know the statistics as to when, they start publishing numbers as to the amount of money that's been given back. I think there was a number a couple of weeks ago. They said, as of this date, this much money has been given back. And they published some of the names. I don't think they published all of them, but I think that the heat to look into whether you should have those funds will increase over the course of time. And it may be at a time when this next tranche of funds is made available, the next stimulus package, that they say that they come up with the rules and they say, and these rules will also apply to prior funds, is what I would anticipate. I mean, it makes sense that, they're continually evolving and fixing the program, that they would say, all right, here's the set of rules that have evolved. We've kind of figured out the mistakes that we've made, both in giving out the money and the forgiveness process and the oversight process, and these new set of rules apply for this over here. And then, it gets into well, what if I was in the green according to the letter of the law at the time, but now you've changed the letter of the law. So there's probably going to have to be well, okay, we're going to give you grace on that because you did the right thing at the right time under the right rules. But so that's maybe a way to say that there is some risk by holding the money and not using it and not seeking forgiveness necessarily sooner than later, because we've talked about, why should I, why shouldn't I? So I'm not suggesting either way. You have to make your own business decision as to whether or not it's in your best interest to keep the money and not use it, keep the money, use it, and weigh those consequences, because it's going to be different for each business. That is, I mean, you guys know your numbers, you know what you use to apply, you know how you're using the funds. And so I think that, and I think there'll be, and this is maybe stating the obvious, more scrutiny with maybe more public companies or larger companies. What'll be interesting is, there's a whole, we haven't really talked about this, is there are affiliation rules with respect to getting the loans that kind of we've put aside because it really isn't necessarily relevant with respect to number of employees, et cetera. So are we going to see a resurgence of that concept where you have, it's really an entity that is affiliated, but maybe they have one LLC with its own EIN in the northeast part of the United States, and then the southeast. So regional LLCs that operate businesses that have sought funds and received funds on their own, but there is an affiliation necessarily with that. Or, and that supposedly was taken care of before when you applied for a loan. What happens now when you're asking for forgiveness? And let's say that some money was used and it's like, we're going to kick those funds over to our sister company. It's kind of one big pot in our mind, even though we know they're separate ledgers and everything else. So, it's, who knows where that is going to go. Those are just kind of some thoughts that have been on my mind about that concept or that issue as to, is the heat going to be put on us down the road for those who are not so sure if they were in the true need for this money. But we'll see.
I just checked my watch, Gary. It's 11:45. So if you have your little timer, you might want to start it if it's okay. For me to now get on my soapbox, if that's all right.
We each took a turn, so I think we're good, right? We got it out of our systems, so.
No, I'm mad about this one. I need to get this out of my system.
All right, go for it.
So if your marketing people yell at you, Jack, on this one, well, I mean, it is more, shaming and fear mongering, and I do wonder about, well, what's the purpose of that? So, I'll be quick about my soapbox. First off, Robert De Niro received some press. I don't care if you like Robert De Niro, you don't like Robert De Niro. There's very few people that argue that he isn't a great actor, regardless of whether you appear or like his politics or not. What he got heat for was that restaurants that he's a majority owner in receive PPP funds. So, kind of your theoretical ethical question is it fair to have Robert De Niro have to go make a movie to fund his restaurant employees who are shut down by the government just because he can, but yet I don't have to do that because I'm not Robert De Niro and I can't go make a movie? I mean, you clearly know what side of the fence I'm at on that one. So related to that, let's say that Jack and I are two business owners. I have my business, Jack has his business. I've spent, years making sure that I have good books and records, following the intent of the Treasury Department regulations. I own an S corporation. I take a W-2, so I've got pretty good records. I take my banking relationship seriously. So I've developed a good relationship with a banker and I trust my CPA. And I rely on them for good information. Thus, I was able to obtain a PPP loan. Jack, on the other hand, brings his crap in at the last second. Always wants to skirt the law. Switches banks as often as he does his underwear, which is hopefully frequently. And really, has never. And I'm using extremes. I appreciate there may be some people that didn't receive, funds. But, the bottom line is the full amount of the PPP funds have not been deployed, period. That's it. And the people who aren't receiving them now are because they don't qualify. And they don't qualify because they either don't have what they need to support the qualification process, which means change the rules. I don't make the rules. Change the rules. Or those people need to spend a little bit of time developing a relationship with somebody that will help them. That is just the price of trying to get into the game. And we've talked a lot, here about, look, there's PayPal, there's Cabbage, there's other sources that have been out there that came to the forefront to help out people that were otherwise with large banks or were lost, somehow in the shuffle. And the SBA internally reprioritized applications to hit harder impacted areas, which meant that, people in Charlotte that otherwise did meet the criteria weren't, had a period where they weren't qualifying. But at the end of the day, I don't know of anybody who has not received funds that otherwise didn't qualify because they met the rules. So now that we got that soapbox out of the way, we go back to me and Jack again. And let's just say, hindsight always being 2020. I find that, I'm feeling pretty good. I probably don't need the money right now. I want to give it back. How the hell is it supposed to get to Jack? Jack doesn't qualify. Like, I cannot write a check and give it to Jack, the people that deserve it. So my only recourse would be to give it back to the government and pray that the government actually gets it in Jack's hands, which they're not because they haven't changed the rules. So then you get into, all right, well, if I give the money back, is that ethically, doing the right thing? Maybe not. That's for you to decide. What I can say is that you will not have a choice on what tax rate you pay. Period. So if you believe that your tax rates aren't going up as a result of this, I think you're probably crazy. Thus, you will be repaying money as like you basically borrowed your own money. So you'll be repaying money that you did not borrow. Which then gets into, using BGW specifically as an example, because I think I've been pretty transparent. We did receive PPP funds. You can make a case for, a case against, do we really need it or not? We're not going to hit our business plan probably for the year, but we'll end up being all right. But if you look at, could one make the case that BGW specifically, do we need the money or not? Well, I don't know. What I do know is it's helped me and our leadership team to sleep a lot better at night in terms of the decisions that we're making. Because if you look at the accounting industry in general, in terms of what's happening, for firms larger than us, which would be greater than 500 employees, they didn't meet the PPP eligibility rules. What are they doing? Laying people off, forced pay cuts, freezing hires, canceling internship programs. Those all seem like bad outcomes that, we'd have probably had to have done too, but for receiving funds. So, it's not, it's not that black and white, guys. And obviously I'm on one side of the fence on this one, whether received funds or not. I mean, it's kind of who I am. I probably would have been this incense regardless. But it really, I really would encourage everybody to, please, hey, it's noise. I just really believe that it's noise.
Well, a few additional comments. First of all, it started out
Fighting with me.
very disappointed that, when I share my underwear washing schedule, that was incompetent. But then I felt better because you were going to give me all your extra money. So I'm okay. I would say, as another example at Shoemaker, so I'm on the finance committee. And so even before COVID, our metrics that we get every month, in fact, I have a meeting and it starts in 8 minutes or whenever. But we're looking at the PPP money that we received is in a separate cell on the spreadsheet, and we keep track of that separately so that we can go and we can. But what that spreadsheet also shows is our performance on work in process, receivables, our costs, which I call a no interest loan to our clients that we advance. And so it shows all those things, and you can visually see in one screen what's going on with our business with respect to performance from the prior year. So I think that, and I go back to, that's important to be able to show that and to have that on your mind as to, do you really need it or not, and regardless of the consequences. And I agree that the rules are what they are, and they're going to be enforced the way they are. I think you have practical considerations as to capacity of the agents. I was listening to, I don't know if it was NPR, WBT, or Fox, or CNN, or CNBC. I flipped through all those because it's interesting, and this is sort of a political statement, but it's neutral in that you can, within like a 3-minute time frame, listen to one channel and then switch to the other. They're talking about the same thing, but you wouldn't know it. Because of the different perspectives. So I like that. You can get that, those two perspectives, but it's going to be enforced. But what I heard on the radio was that the IRS agents are protesting having to go into the office to process tax returns and other stuff related to this. I mean, obviously the PPP program, EIDL programs, Main Street, all those are kind of a priority, but they have millions and millions of returns, and multiply back by the number of papers that are sitting in warehouses and the back of semi trailers at this time right now that have not been processed. And the point was, if you're expecting a refund anytime soon and you're a paper filer, then that's just not going to happen. And I guess there's not as much concern because a lot more people are doing things electronically, but those who don't have access to electronic means potentially, or are more paper inclined. So those realities, as far as enforcement, I think I go back to something that we've said, now months ago, is that they're going to go after the bad guys first, the ones that it is clear that they were trying to game the system and hopefully not get caught because of all of the smoke and fire and everything else that's going on in the economy and in relation to these loan programs.
So 3 questions, lightning round in the next 5 minutes. And one of them has been
Welcome to Hannity and Combs. Just kidding.
So first question, have an employee who's taking a job elsewhere, just moving on, wasn't interested in a counteroffer. I don't need to replace that person right away because business is still down, but I'm assuming I'll have to, but I assume I will have to prior to applying for forgiveness to keep my FTE count the same.
Yeah, you're gonna fall into the either I tried to replace him with a similarly qualified candidate and I couldn't find him or her. That's exception number 1. Exception number 2 would be, hey, we're down, but you'd have to have some form of traceability back to, CDC or government imposed order. And then exception number 3 would be, yeah, I hired him back, during my last day of my cover period. So one of those 3 is what you'd have to deal with.
All right, next question from David. Do you think anyone who gets more than $750,000 will be subject to federal A-133 audit? And here's the quote. Previously known as the OMB Circular A-133 audit is an organization-wide financial statement and federal awards audit of non-federal entity that expends $750,000 or more in federal funds in 1 year.
They've already pretty much said that they're not going to doink around with people that got below $2 million. So theoretically could they, but will they? I mean, probably not, because go back to Jack's counts. Where the heck? I mean, if you looked at how many of those audits do they do per year, the same number of people still receive that much money, but then they just tripled it based on this. So I just, I don't. That's an interesting theory, but I don't see that practically happening.
Yeah, the only thing I would see if that might happen is and I don't know how robust that audit process is, meaning automated. Yeah, I think that the IRS will use whatever assets they have to expedite audits. So if that is a process that runs like well, this is kind of an oxymoron to say finely tuned machine in the government context, but it runs well, then possibly. But I think that, if 750,000 is the benchmark, that they will use maybe $2 million or whatever the number is, somewhere more than 750 because of just the practical nature of processing it. So I think it's more of is that an efficient asset procedurally for them to use that process? But I think it's really going to be focused on the numerics of the actual loan amount and then, prosecuting the bad actors regardless of the dollar amount, but focusing on ones that are higher.
Yeah, I mean, if you just think about practically what could the IRS pull off, this is honestly, they aren't sophisticated. The computer systems are really out of date, but at the same time, what they do have the ability to do is data analysis and data mining, because that is how they determine who to audit. Like, show me all the tax returns of people that meet this criteria. So what would be a good example that if I'm the IRS, I'd want to take a look at? Well, if the sum of my annual payroll divided for the year that I reported, divided by 52, multiplied times 8, if that number is reported on my 941 is 50% less than what I put on the dang payroll cost of my application, I probably committed fraud because how the heck did I have that much in retirement costs and health insurance? So, which would have been the only other 2 qualifying costs to put on that line. So I think it's going to be stuff like that where it's just like, look, it just flat out, you lied. I mean, not like, no, I really, really freaking tried hard to get this right. And it's complicated. And I literally am willing to go to court and testify I got it right. I don't think those guys are going to have a problem. I think it's going to be people who literally just flat out freaking lied and misrepresented what they put on the form. That is who actually, regardless of bad press, of whether you should have had the money or not, that is who actually is going to face some sort of activity with the government, I think.
Here's a quick follow-up to this same thing, and it is the A-133 a totally different process than the SBA PPP audit? In other words, someone who got $4 million, would they face 2 audits?
I mean, I can't imagine the case where it would be a redundant audit.
I'm not familiar enough with the back office process for either program. So, but I think that efficiencies would be, let's say that that audit started first. So the A-133 audit started first, and then the PPP people said, well, wait a minute, they would probably allow the 133 audit to proceed and see what is found. I don't think they're going to say, well, we're going to start our own investigation. So I think that's more of a practical, and that's a Jack theory answer. And so, but it just doesn't seem logical that you would have to go through 2 audits. Now, would they use it as a weapon for that the first audit was either inconclusive or they weren't sure about it and they kind of said, well, all right, we're going to let you go. And then it gets bumped up to a supervisor that says, wait a minute, not so fast. And then they use the PPP program. But at that point, they would have the ability, I think, to review the audit results of the 133 examination. So again, I'm speaking out of turn. I'm just saying that seems like a logical way of mixing those 2 together without actually duplicating it.
Here's the last question for Jack. And
basically what this question is underlying getting at is that, look, I mean, if this was a person who is otherwise asking for government funds outside of PPP, you're supposed to do this audit. I really do think that, like, man, that would be, I mean, as soon as enough businesses say, are you freaking serious? You gave me an easy form. You tried to make this easy in terms of, and hey, it'd be great for my business, but you tried to make this easy for me in terms of applying for forgiveness. And now I've got a $40,000 freaking audit expense with my CPA firm to produce this audit for you. I don't see that dog hunting. Again, regardless of your politics, Marco Rubio's phone's getting blown up on that one. And he's proposing some regulation exempting this one.
So this was the scenario that was raised this last week to me, and this is a Jack question probably, but we talked either last week or a couple weeks ago about a couple examples where firms received PPP money and then proceeded to go file for bankruptcy. And the question that was asked to me, and I said, I'll pass it along, which was, doesn't that seem like fraudulent conveyance?
Yeah, interesting question. Yes, because that is, in order, a fraudulent conveyance of, it depends on what it was used for, right? And so I'm splitting hairs between use of money, loan proceeds to pay third-party employees versus paying yourself as an owner. And I think that would be a key difference between that, because the whole concept of fraudulent conveyance is that you receive something or you have something and then you caused it to go outside of being an asset of the company, whether you spent it or whatever you did with it. And so that's a very loose, very general definition of fraudulent conveyance. So I think that there's a difference between the use of the funds, but I think there's also will be an issue with those who knew that the money, even receiving the money, at the time they did the application, or even at the time they received the money, that they knew there was no way that they were going to dig. The hole was so deep that there was no way they were going to do it. And all they did was extend the death knoll of that business. I think there's a theoretical problem with that. Now, how do you enforce that? I mean, how, without going deep into and start talking to owners and saying, okay, you knew you were operating in the red, and you knew that even if we gave you twice the amount of money that you received for a loan, there was no way you were going to dig out of this. And so I've read articles that say exactly that there are people who knew that all they were doing was extending the life, that there was, that it wasn't going to happen. Now, if I'm one of those people that I'm like, well, wait a minute, you're accusing me of something pretty bad, but I thought that surely that this was just an installment of stimulus. Surely you guys, government, were going to give me more money down the road so that once I get through this very short-term pain, that you knew that there was more pain coming, that you would start stroking checks out and putting money into my bank account, kind of thing. So, I think that there is a legitimate good faith discussion that people really had that belief. It's like, okay. And then there are others like, well, I got to at least try. It'd be stupid for me to say I'm going to give up now when someone's handing me money and saying, hey, by the way, it could be a grant and not a loan. So, there's all kinds of perspectives on that. And I think it gets back down to who were the purposeful bad actors with malintent from the beginning of this entire process.
Yeah, I think,
Excellent.
to play Jack on TV while I'm doing it, is there ever an instance where I get sanctioned by the state bar for practicing law when I'm not really a lawyer? Because they would do that in the CPA world. You'd appear in our little circular. But anyway, when I think to this one, all right, so I apply for it and receive $1 million, and I blew it in the 8 weeks and declared bankruptcy, but I spent it on the intended purpose, and I otherwise met the criteria associated with forgiveness. I think I could go to bed at night and feel pretty good about that one. Spent the $1 million, paid off some AP, which is not a qualified purpose because this is really a restricted fund when you think about it. Paid off some AP, or otherwise, hey, that's now just cash in the bank for a trustee to figure out how to dole out. I think you're probably not going to be looking good on that one, because it was a restricted fund that you didn't use for the intended purpose. So, everything else that Jack said also being true, like who did I actually pay with that? I mean, if it all went in my pocket, that's going to be probably bad, even if it did meet the intent of the rules.
Adam, that was a very good Jack impersonation. The only thing that I would say is you need to start that with, I object, and then have a pause. And
overrule!
Start a TV program like Judge Adam. Let's do that.
Yeah, actually, if you could do that Roadrunner thing where it's like you hold up the sign that's like, just so I know, like, hey, you're breaking the law, right?
Well, I don't see any other questions. We are at 12:09, and our audience is dwindling. We're down to about 30 people. So, but for everybody that's hung with us, thank you. For anybody that's watching this thing on YouTube because you've got insomnia or something, thank you. Smash the like button on that thing. We will be putting this up on the BGW CPA YouTube site later on this afternoon. And, I think we'll probably be back here next Thursday. who knows? We may actually have some new things coming down from the government now that, you know, they're going to get back in session again with Congress, I think. So who knows? And if they don't have anything new, we'll probably still be here and let you know that you're at least not alone. So thank you for taking time. Oh, and go to Amazon before China quits making those things and shipping them to us on the coin counters.
It was less than $20, and then, you know, using child labor, it's kind of fun. It has the crank, and so, you know, it was fun for a little while. I didn't tell them that we could actually put. I mean, we had kind of the same thing. It was coins in. It's actually a Carolina Panthers big plastic container. I mean, there's probably 10 years of coins in there, and I let them so they could see the value of it. I did it that way, and then I told them that Bank of America gave me these big plastic bags that we can just put them in there and they count it for you. But I didn't tell them until day 2. So
it's a good learning lesson.
yeah.
Teaching those kids young, that's a good thing.
All right,
Adam
folks.
and Jack, thank you so much. You guys are awesome, and you're a lot of fun and a lot of wisdom in there in the middle of all the craziness. So thank you. Thanks to everybody that tuned in. We'll get this thing up on YouTube, and we'll see you next week on the same Bat channel. Adam, are you back on next week? Is that kind of an iffy thing?
Yeah, I should be able to.
All right, cool. He's going to come and from some remote location, probably from his car. So anyway, we'll see.
Oklahoma.
What?
Woo!
In Oklahoma,
Whoa.
which is right next to Kansas. You guys have a good one. See you.
Thanks. Bye.
All right, see you guys.